This is the Amplify Transformational Data Sharing ETF update for the first quarter. I'm speaking with Michael Venuto. Michael, let's jump right in. This has been a very busy quarter. We've had a banking crisis. How has it impacted the space?
Yeah, I mean, the banking crisis, without a doubt, has renewed interest not only in Bitcoin as an alternative to the banking system, but the concepts behind blockchain and how you can take the power and decentralize it rather than always having to be bailing out things. The regional banks have been something very interesting to us in the portfolio for BLOK for a long time. Many of them are ahead of the larger banks in embracing blockchain technology for loan origination, mortgage creation, tracking, things like that. A lot of them work with private companies like Figure. So to that end, we did have positions in the start of the quarter in regional banks like Signature Bank, which is now gone, and Silvergate, which is now gone, and Customers Bank, which is in a lot of ways thriving. So we were able to trade through this in a very positive way. All in all, for the quarter, BLOK is up over 27%, even though there's been a lot of hiccups in that space. So Signature Bank, we actually exited in early January, not because we had a crystal ball on the duration of their fixed income portfolio. We exited because the primary use of blockchain at Signature Bank has been the idea of mortgage origination, and mortgages had stalled, and it didn't seem like a direction they were going in anymore. We also exited Silvergate in 2 transactions before its demise, primarily because, talking with the, call it, supply chain, the vendors that were using the bank, we started to see that the Send network, their ability to transact in both crypto and USD, was not being used as much by people like Galaxy or Coinbase because of their concerns. So we decided to exit that one as well. On the other end, we actually added to one in the middle of the crisis because we felt they were benefiting from deposits moving from SVB or Silicon Valley Bank or Signature, which was Customers Bank. We're always very close with these companies. We meet with the management. Well, we're able to ask them direct questions and ask their customers direct questions. Another regional in the portfolio that we didn't add to, but we do own, was New York Community Bank, which got to acquire some of Silicon Valley Bank's deposits. So all in all, I feel that Dan Weisskopf and I navigated this banking crisis in a very good way in BLOK, but also benefited a lot from the renewed interest in alternatives to a system that is pretty shaky right now. So that's kind of the update there on some of the trades around the regional banking crisis and its impact on BLOK.
So, Michael, it really does speak to the power of active management in a space like this, because if you were in a purely index strategy, you were going to have to wait for the next rebalance or just be taken to zero.
Yep.
So, from this crisis, too, it looks like there are some concerns or maybe opportunities coming from some more regulation in the space. What are your thoughts?
Yeah. So, probably the name that's been in the headlines the most in terms of regulation is Coinbase, right? There was that Wells notice. It was kind of like it was like a balloon deflating rather than popping, though, right? Because it's really like no surprise. Coinbase has tried to work with the regulators, just like Gemini has tried to work with the regulators. Um, and they didn't give guidance, they didn't give clear answers, and then they come out with a Wells notice. That's the biggest problem with the regulation issue when it comes to Bitcoin, cryptocurrencies, blockchain today, is it's not that the regulations are bad, and it's not that they're um, you know trying to misunderstand anything. It's simply that they don't exist. There's not enough of them for anybody to get a clear understanding of what they're supposed to do, which forces people into making investments in private companies, offshore things that end up blowing up. And it's like, oh well, we don't regulate that, so that's not our problem. Well, no, the fact that you're unwilling to step in and make the regulations are why assets are being forced offshore, why assets are being forced into fake companies instead of the protocols themselves. Um, you know, we saw another one. We had a SPAC in the portfolio. It's called Nocturne. And for the time period, it's actually a huge win in our heads because we bought it around $10 and we got out of it slightly above $10. it was a blockchain focused SPAC that ended up doing something in the medical field. Because regulations killed the whole world of SPACs for blockchain, or lack of regulations. So, during a period where crypto was collapsing and everything, it was actually a tiny little bright spot in the portfolio. Um, so, the regulation concept, we really need to embrace just clarity, right? That's the key. Clarity will allow these things to rally. It's a big part of why blockchains had such an enormous expansion in the last 3 months.
Yeah. So let's dig into the ETF, BLOK. What is the investment thesis behind the fund?
Yeah, so I mean, quite simply, it's about investing in the picks and axes of the blockchain community. So we have that segmented into multiple different areas. One being exposure, meaning the largest cryptocurrency, Bitcoin. We want to have exposure to that concept, through ownership in some of the Canadian spot funds, as well as micro strategies, which is, Michael Saylor pulled off a miracle. I love that everybody kept saying the guy was over leveraged. And then it turns out his bank was the one that was over leveraged, and he was able to buy back his loan at a discount and get more Bitcoin. Other ones are things like conglomerates, Galaxy, that is involved with investment banking of crypto, as well as trading of crypto, as well as venture of crypto. That's a position that we added to throughout the quarter. The miners are always a big important part of this. They really have done well, but they haven't rallied or seen the short squeezes yet that we expect. We actually added to the miners all throughout the quarter. I feel like all the previous videos, I'm always talking about how we got conservative. This is the one where I get to say, hey, all throughout the quarter, we bought more, right? We started out buying Hive and Bitfarms. We added to Riot. We added to CleanSpark back into the portfolio. And then we added to CleanSpark recently in late March. So there was a lot of that going on to get to these core exposures. Other things that we invest in BLOK are more traditional companies that are embracing blockchain. We exited or reduced a lot of that in this quarter because we're able to see the opportunities again in new spaces, right? The shakeouts of last year, really left the bones of some good entities that we could go back into. So, throughout this quarter, we did reduce things like Intel and Walmart and Accenture, IBM. These are core holdings that I would say we were hiding in during the crypto winter. I'm not saying it's a full thaw yet, but we have definitely reduced our exposure to more mainstream blockchain projects and now looked to get into more and more pure plays. The miners have gone from under 15% of the portfolio to about 20% today during this quarter. And that wasn't just appreciation, that was also us acquiring new positions. We also tend to own on-ramps. Like we increased our exposure to PayPal, but we also started to decrease our exposure to names that are more just asset management on-ramps, right? Vonta Noble was one. It's one of the players that, in Europe gets you exposure to direct Bitcoin, kind of like why we own Wisdom Tree. Wisdom Tree's in that game, but also Wisdom Tree is now using blockchain to do admin of their ETFs. So they even changed their ticker from WETF to WT to say, hey, we're not just an ETF company anymore. So we did not trade out of Wisdom Tree. It's also been a bright spot in the portfolio. So I went all over the place there, Jay, but I
No,
think we
I
got
like
the
it.
question answered.
Absolutely. In fact, for the novice investor, somebody just looking to allocate to the space, could you define what an on-ramp is in its most basic
Sure.
terms?
Yeah. So in the basic terms of cryptocurrency, blockchain, it's always talked about decentralized financial. Heard the term DeFi thrown around, right? And what is that? That's instead of trusting a third party, a JP Morgan, a Jamie Dimon, a Wells Fargo, a Bank of America, a Citigroup, a Silicon Valley Bank, a Signature Bank, instead of trusting them to do your transactions, to verify things, you trust a decentralized network. That's what a public blockchain is. And that's what Bitcoin is. And that's what Ethereum to some degree is, and some of these others, right? So that's DeFi. what is an on-ramp? An on-ramp is where you take traditional finance, right? A brokerage account at Fidelity, and you connect it to DeFi and you get people access. The same thing I would call Fontenoble. They made essentially ETPs and funds that gave you access to cryptocurrencies. That is how we think of on-ramps. PayPal is doing that as well, but when it comes to PayPal, it's not just getting exposure, it's being able to transact and use it. That's a big leap forward, and it's also a network that's huge. Coinbase would be in that world as well, um, as an access point from traditional finance. Now they seem to keep getting bashed on the head as if they're just decentralized finance, but that's not true. It took so long to get public and do everything because they tried to do it all right. And I mean, I don't think people really understand the scale of Coinbase. 100 million accounts. Like it's a big thing. So that's how we think of on-ramps.
Thank you, Michael. So some folks watching this interview are considering allocating to the space. This could be portfolio managers or individual investors. How should somebody look at adding a solution like this to a diversified portfolio?
Yeah. So number one, it's usually bucketed in as a theme, right? Like I want exposure to the picks and axes of the future, right? Like the future is not going to be on a traditional banking system, right? It's crumbling as we speak. It's going to try and hold on. The regulators are going to come in, but the reality is people would rather trust a decentralized computer network than a trusted third party that has proven over and over and over and over again they can't be trusted, right? They either steal from you. I mean, I was on the phone last night with Citibank on a dispute over $150 that they say that I took. I mean, it's just insane. I've been there. I don't even want to get into the rant, but it just doesn't work. And so people are embracing this theme and they want to invest in it. People see the idea of, I want some correlation to this concept of cryptocurrency or Bitcoin. I want the picks and axes that are going to mine this, that are going to get access to this, that are going to use this to improve their supply chains, that are going to use this to make mortgages faster. That it's that technology, it's that theme. It's also a hedge against all those other systems that you probably own in your broad-based beta, right? Uh, I think it's a great way to diversify and get access to things that really will transform the future.
Michael, yesterday I was standing in a bank branch closing an account. It took about an hour and 20 minutes to get through the whole process. And maybe I had this interview top of mind and I was thinking, my 16-year-old son will never be in a bank branch. He'll never have a reason to. These are dinosaur relics of the financial system. So,
right, and it's so funny, Jay. Really, the only reason to go to a bank at this point is to get cash out, and that cash is more likely to be used for nefarious things in cryptocurrency. You can't track the cash; you can track the cryptocurrency. It's just a bad, stupid narrative. It's worse than the energy narrative, right? I saw this, that energy narrative that came out for a while, like, oh my God, that's using so much energy. Yeah, but it's like 1/3 of the gold mining trade. And what do we use gold for? Jewelry? Like, at least this transfers value. Um, and then I saw one the other day, somebody was tweeting out that the Bitcoin network uses 50 times less energy than the entire banking system. Now, this is a narrative on the other side. Like, it's too far the other way. It might be true, but if you actually used Bitcoin to fully replace the banking system, that energy is going to be a lot more, right? Because there's going to be a lot of on and off ramps. So the narrative can be put to the extreme on both sides, but I do think it's been an unfair narrative that on the use of energy is a negative. The use of energy here, a lot of it is renewable, and it's building something. It's building, the code and the network that all transactions will be used on in the future.
Yep. So, Michael, these interviews are always a lot of fun and educational. Appreciate you coming on. To learn more about the BLOK ETF, visit BLOKETF.com. That's BLOKETF.com. Thank you, Michael.
Thank you.